Imagine a project developer standing in front of you with a rare investment opportunity. Our CFO, Blake Meesom, and I, that's why we're here today, and hopefully at the end of 10 minutes you'll agree with us. This is our forward-looking statement. The Reader's Digest version of this is if you're interested in that rare investment, please go to our website, look at our full investment package and our feasibility study. Crystal Peak Minerals is who we represent. We are a advanced stage SOP project in central west Utah. SOP is a premium priced potash fertilizer. It's a preferred fertilizer for chloride sensitive or chloride intolerant crops, crops that need a high yield and can pay the premium, and also for areas with high drought. We completed a feasibility study at the beginning of the year, and we find this project in the first quartile for costs and for capital costs and for operating costs. So it's a robust project, as you'll see later. The good thing about the project, it's low political risk, very low permit risk. Nothing lives on this playa that we're harvesting from. There's no bugs, there's no bunnies, and no Native American issues. Great place to be producing a property from. And the other thing is we have a strong financial commitment from ERM Capital out of Australia. They've been there with us through our development to date and are willing to support us for another $60 million, or 1/3 of our equity raise. Our feasibility study is presented here. On the right side you have the assumptions. On the left side you have a summary of the key metrics. And again, as we look at those metrics, it's a pretty robust project. It's $730 million in PV with a rate of return of about 21%, 30-year mine life, about a 4.5-year payback. In addition to this feasibility study was based upon SOP only, and as we've looked at other associated minerals, mag chloride, done some value engineering since, we're probably looking at close to $1 billion as far as MPV. And the other thing is, in addition to the 30-year reserve, we have a resource that will report that's 4 times that. So it's a very robust endowment for potassium. The reason I say this is a rare opportunity can be expressed in this map that I'm showing to you. There's really 3 operating brine SOP projects in the world. One is in China. China consumes everything we make, everything they make. The other is SQM in Chile. And what you'll find is they are retooling to make more lithium. They will make less and less SOP. And then the other SOP producer is in North America, the Great Salt Lake, which is Compass Minerals. We plan to be the 4th. There are a couple brine plays in Australia and in Africa. Again, there's sovereignty risk and infrastructure risk with both those projects, and we are the most advanced project yet to date. For those who may not be familiar with the potash market, just a quick primer. It's about a 70 million ton market. Most of that is in the form of MOP. MOP is the chloride equivalent. Think of it as the cousin to table salt, potassium chloride. The other main component is SOP, which is about 9% of that market. That's the material we're taking to market. We'll touch on that a little bit more. There's also a SOP of magnesium, which is it's similar to SOP. It just has magnesium in its mineralogy. And then finally, there's NOP, which is nitrate of potash. And again, most of that comes from Chile as well. If you look at the potash market, there's good growth projections. We're looking somewhere around 4% internationally, about 5% domestically. Current market is just under 500,000 tons a year, with the opportunity to grow to about 1 million by 2025. The bulk of the use, the main markets for SOP in this country is California, primarily almonds, pistachios, cherries, high-value crops. You get up into the Pacific Northwest with potatoes, alfalfa, things of that nature, and obviously tobacco and other products are pretty important. The other thing in our market studies, we've found there's a significant amount of unmet demand, and that's why we feel that we can move into this North American SOP market without a whole lot of price destruction. Just a couple pieces here on SOP and how it's produced, because this is an important piece of our story. There's basically 3 to 4 ways you can make SOP. Half of it is actually made by synthesizing it, where you take the chloride, salt, the MOP, react with sulfuric acid. It's a very costly process, and in the generation of that, you make a boatload of hydrochloric acid, which needs its own market. The other 2 options are to react salts, and the third option is to harvest it from brines. Our operation harvests from brines, which is the lowest cost opportunity out there, as you'll see reflected on this cost curve. Another example of the costing is this is a slide that shows MOP pricing and SOP pricing. SOP pricing out of California is the top line. Sulfate of potash, that is the market that the bulk of our product will be going into. The green line just below it is its MOP equivalent, so you can see there's a significant margin above that. The red line below that is the cost of selling MOP in the Corn Belt. So you see there's a significant premium, somewhere between 30 to 50% over time associated with SOP, and that's what makes this an attractive project for us. We want to talk social responsibility. There's been a lot of focus on doing things right. The project itself is a solar evaporation process, so the energy consumption is very low. In addition to that, we will have extraction wells on the pond. Those will be solar photovoltaic, and so the majority of our extraction process is actually solar based. The water we use for our process, for our recharge model, is primarily brackish water. We are in a terminal lake, and the water we use is that's at the end of the process. The other thing that's noteworthy, as I said, there's not a whole lot. It's a pretty remote area. We do end up with a natural endowment of clay out there, which is great if you're building evaporation ponds. And then finally, we're in the final stages of our mid stages of our permitting. Our draft EIS is in Washington, D.C. as we speak today. Our 45-day comment period will be done by the end of the year. We expect record of decision and notice to proceed by Q3 of next year, and to start construction by Q4 of next year. To that point, government support has been really good. The new administration has done a great job of streamlining permits. We've actually shaved 4 months off our federal permits. The state of Utah has been extremely supportive for a $400 million project. We have a $100 million tax credit that becomes available as soon as we start producing. And needless to say, we have lots of local support for the project. Our management team, Blake and myself are here. We're basically operators and constructors. That's where we're looking at taking this project forward. In addition, Doug Hoadley is just recently joined us. He has a long history of marketing potash, a key part of this commodity, and you can see the rest of our team there. So in closing, again, it's a rare investment opportunity. It's a high, low cost, high margin property with a great market. We have excellent project economics. As I said, our feasibility study looks at about $730 million. The EBITDA, we're looking at about 150 to 200 million EBITDA. If we look at our peers, they're trading somewhere around 10 times that in the market. It's a great market. We're right on the back porch of that, and we're in a very stable environment. We will get our permits, and we will be able to keep our permits, and we're right on the back porch of the major SOP market. So I appreciate your time. Thank you for listening to our project. Don't know if there's time for questions, but I'll take any you might have. Okay, thank you.